Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Thursday, October 12th, CPI data. And oh boy, we have a little bit of problem. Inflation rate month over month came higher than expected, 0.4 instead of the 0.3 consensus. And inflation rate year over year came also a little bit higher than expected from the 3.6 to 3.7. Core inflation, we got flat readings as expected, 0.3 and 4.1 lower than the previous one and as expected. This is the part of the sticky inflation and Fed's focus right now, but inflation rate headline came not as expected. Wall Street missed expectations, and that's causing a lot of issues. That coupled with the fact that initial jobless claims came also 209 instead of 2010, a little bit higher, and jobless claims a little bit higher than the previous one. So I think labor market remains tight and we need to see more cool down. Yesterday's PPI came hotter than expected. Today's CPI missed expectations, and we all know what happens when Wall Street misses expectations. In detail, everyone is watching the part of the sticky inflation. Look at this. Shelter from 0.3 to 0.6 increasing. Transportation services came lower, but medical care services came higher again, and overall services less energy services came higher than the previous one. Even though energy, gasoline and fuel came from 10 to 2, and gas services utility pipe came from 0.1 to minus 1.9, we have an increase in headline inflation, in general inflation. So that's an issue. And this kind of missed expectations really put more pressure to the downside on equities. Everyone was watching this double bottom. We got the double bottom, we got the move higher, and everyone was watching this descending trend line. And we tried, let me tell you, we tried a lot of times to really, this is CPI establishing the low on pre-market, pushing higher, and we tried 1 time, 2 times, 3 times, and all this pressure was really building. Everyone was waiting for this, and at 1 p.m. Fed Bostic said that this is not enough. Inflation is not cooling down as expected, and everyone bailed out. Everyone. We saw that coming. I saw that coming because dollar is putting a 0.80% on the day. Look at this. Look at this context. Previous resistance is now support. And throughout all the day since CPI, dollar has been grinding higher, hugging the 45 EMA and putting pressure to equities. Russell 2000 also was a sign. Look at this. Look at this bad day, minus 2.56. Selling off since the open. Financials all in the red. XLF sector selling off, putting a minus 1%. And then S&P was suffering, but Nasdaq was holding until Fed Bostic did a reality check, and then we got the breakdown. We got the breakdown, and we continue breaking down. I was expecting some kind of support on the 30-minute chart from yesterday at this level, but we continue lower. And we are at prior's low. We are at yesterday's low at this level. So we put this big day late spike yesterday, and we completely destroyed that today. Sellers are having an edge up here. They have everything they need to have a lot of people willing to short this based on fundamentals and also this technical resistance. And I think that's what happened. I think a lot of people were expecting going higher on bad fundamentals, and the reality check came in and destroyed a lot of bulls. Sadly, that happens. Crude oil is also suffering. The artificial increase by the OPEC, this was the previous gap, was destroyed. Look at this, 2 days, today minus 1.28, and the next zone of support is 78. It's 78, from 95 to 78. This is what happens when prices skyrocket and demand is not there, even though OPEC tried to manipulate the market, artificially cutting production. That's the reality. That's the worldwide demand right there. So dollar spiking up, and look at yields. Yields are skyrocketing again. 3 days, the 2-year yield pushing 5% plus again, and the 10-year is unbelievably high. To put that in context, the 1 week chart shows us a level of 5.2 as resistance, and we are almost there at June 2006 levels, reaching almost 5% on the 10. The inverted yield curve is also a menace. It's slowly but surely pushing higher. And the issue is not only the inversion. The issue is when both yields cross the shear line and uninvert, because that would mean that the shorter term it's going lower faster than the longer term, and that's that sign of the Fed cutting rates because the economy is sick and something is broken. So everyone is watching yields and dollar strength, and obviously the S&Ps, look at this, the S&Ps was pretty clear on this resistance. A lot of people were watching this and they took the CPI missed expectations to put down a big down day on the S&Ps. Nasdaq tried to hold, but at the end of the day, Fed Bostic put the final nail on the coffin, and well, this is what happens. So we still have some kind of setup available for us towards last week high or a zone around here to put a higher low here towards next week for the final break of the descending resistance. That might be possible, but fundamentally, I think Nasdaq will not be able. Not only because fundamentally we have some readings that might affect inflation, but also because we are starting earnings. Earnings are around the corner, and today we got Delta Airlines crashing earnings on huge profits from summer vacations. But tomorrow, Friday, we have JP Morgan, we have Citigroup, Wells Fargo, BlackRock, financials starting tomorrow. Next week, Monday and Tuesday, we continue with banks, Charles Schwab, First Bank Republic, Bank of America, United, Goldman Sachs, Interactive Brokers. So a lot of expectations and a lot of eyes into these names. And did you notice what happened today with the XLF? We sold off. So I don't think investors and traders are expecting good earnings, and that might affect performance on equities. So manage your expectations towards the next earnings season, because at least for banks is looking pretty bad. And also Wednesday we start with tech with Tesla. So be disciplined, manage your risk, be patient, because there will be a lot of opportunities. And right now, the context in which we are today is not the best to really try to catch some beats or something like that. This is a clear breakdown setup, technical setup, coupled with the fact of strong correlation with the dollar, yields, and crude oil. Metals are also in the red, so everything is pointing towards weakness everywhere. So if you are in the red, cut those, take the day. Tomorrow's a new day. Let's see what happens next week. And if you're in the green, take those profits and run. Because I think this volatility might continue, not only with inflation, also with the uncertainty in Gaza Strip, Israel war, all that stuff. So be really disciplined these days because we got the readings, we got bad numbers, and we continue seeing this message of higher for longer. So markets are adjusting, some people are getting a reality check, and this is just like, this is what it is. Markets are like that. Learn from that and take a deep breath and prepare for tomorrow, for next week, for new opportunities. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, support the channel, subscribe to the channel because I upload videos every single day for market forecast, market updates, and market recaps. I appreciate your time as always. I hope you had a good trading day despite the fact that we are getting a really nasty market, tricky, difficult market. Don't beat yourself and try to get up, stand up, and continue watching, taking hours, and learning from this channel and also from the markets. Stay safe, everyone, and see you tomorrow.